Live streaming is on.
All right. Good afternoon, everybody. Event Trader here. Just about to jump on with Brandon Mars, options trader. But first, quick look at the markets. We are just treading water above the 20-day moving average. We talked about that earlier on in the session. We did get a pushback up to that 52.52 area, which is uh, one of the levels that I was looking at it when we took that long early on, looking for a possible bounce, and it has been unable to really get through with any sort of conviction, and thus just leading to a bit of a sideways trading range at the moment. So, second day of Q2 and second day of selling pressure coming on in equities. So, with that backdrop, and we are keeping an eye out here on Mary Daly too. Her comments are starting to make the rounds. Quick glance at those comments here. Uh, Nothing jumping out. Daily still projection of three rate cuts is not a promise. So I don't think anybody thought it was. But obviously, the Fed continues to kind of push back towards that maybe two rate hike cut or two rate cuts instead of three at the moment. Just pouring some cold water on the markets. We have seen the markets move back in that direction. Certainly, the CME Fed Fund futures are pointing towards markets pulling back on expectations for rate cuts. And I don't think that that's necessarily a bad thing. Now, she did say that three rate cuts this year is a reasonable baseline. So, what we're looking at is a Fed that's flip flopping between two to three cuts. I don't think that that should matter too much to market participants, but definitely leading to a little bit of volatility early on in Q2. So, with that in mind, let's welcome in Brandon Mars and get his thoughts on this current price action. So, Brandon, any thoughts on the start of Q2 here?
Yeah, like you said, plenty of sideways trading from last week and into this week. So got a little annoying at points last week, I would say. Just kind of sitting there waiting for something to happen. So yeah, I mean, obviously not a very strong day today, but definitely I'd say a little bit better on the trading front. Plenty of red out there on my watch list. Like you said, I'm kind of watching the same thing that you are, that 20-day. When it just got right above it, and I guess in a way you could say that's somewhat of a small amount of strength in the index. But for me, I kind of look at it and say, all right, it's gotten this close. It's probably going to go and hit it at some point, I would think, just because whenever you get that close to a moving averages, they just kind of tend to gravitate towards that direction. So, yeah, keeping an eye on this bounce. To me, it doesn't really feel all that strong underneath the surface. Just from the indexes and then also just some of the individual names that I'm watching. Volume on the upside has been a little muted, seeing kind of the reversal type candles, upper wicks, kind of on a few of the different names that I'm watching. So I'm not feeling a ton of enthusiasm on the bounce. And for me, my watch list is still pretty red. Not seeing a ton of names flip over to green, which I usually like to see before I kind of start thinking about calls again.
Now, when you're saying your watch list is primarily in the red and waiting for some things to turn over into the green, are you talking about just intraday in terms of advanced decliners, or is there a certain item that you're looking at, an RSI, 2-day RSI, or anything along those lines?
Yeah, just looking at my watch list as a whole, I've got my put list, my call list, and only 3 out of the 20 or so are in the green, and a couple of them are barely in the green. So usually I like to, if I start off the day with 20 in the red, I usually like to start seeing 5, 6, 7 move over, and just they're kind of remaining in the red. And you know, Thinkorswim has a nice little quote trend thing where they, kind of show the bid and ask. It gets a little crazy because it's just a bunch of flashing red and green all day. But, they've been fairly red throughout most of the day. So I usually like to see a little bit more green coming in on those quote trends across the board too.
Out of curiosity, what are the three names in the green?
Reddit, Meta, and CRM.
How's the Reddit options been? Have you been following that? Obviously, they just went live a week ago. So
Yeah, so I actually talked about Reddit yesterday in my notes. I thought it was kind of reaching that point that it would be a good dip candidate. And I think if it wasn't, it was actually one that I really liked heading in today, but everything was red. So I kind of focused on that list as opposed to my calls. So I didn't take anything on it, and up real big right now. Yeah, I mean, like you said, one of the reasons that I didn't necessarily fire on anything is no surprises. The implied volatility is pretty steep on it. So expiring this week, you're talking in the 140, 150 range. So pretty expensive, not too heavily traded. You got about 26,000 calls and 22,000 puts traded today. So not too thinly traded, but nowhere, like a Meta or a name like that.
okay. Now, out of curiosity, so I agree with you on this bounce being a little weak. Makes me kind of want to lean on it a little bit. I think that we could be looking at a potential flush down below. Really haven't had a meaningful one. I mean, I guess there was a small one back on February 22nd, but you'd have to go all the way back to January 17th, which would have been right around when all the bank earnings were coming out, of course. And that's when they were posting some relatively poor results, a lot of one-time items that were impacting it. So we're not too far away, of course, from Q1 earnings season. It's going to start off April 12th, really, with JP Morgan, Wells Fargo, and Citi. But really get the feeling that people are going to want to press this further and push it down. So I guess, Brandon, the question I'd ask for you, what are you looking at on the charts that you might say, okay, maybe this isn't just your garden variety pullback, perhaps a little bit more of a meaningful correction. That 20 certainly been big downward, upward trend support since January 17th. So, what are some of the things that you're watching here in the markets? What maybe some levels in the S&P futures or Nasdaq futures or anything along those lines?
Yeah, so I'm primarily focused on the NASDAQ just because of the typical names that I trade. So I was checking this morning, and, if you, on the daily chart, if you're looking at February 9th, nice big green candle. And, if you were to draw a support or a resistance line from the close of that would put you at about 18,038. So call it close enough to the 18,000 level, which, would coincide also with the 50-day. And if you were to draw that line, you would see that kind of 18,040 level has, it definitely acted as a resistance level and a support level once it broke through. So if I just visually, when I look at the chart, that's looking kind of like the next cluster area that could provide some support. So, at that level, I'd probably be interested in, taking some calls if we did dip down that low. And, if we didn't hold that, that's probably where I would start thinking that the pullback is a little greater than a couple of days.
Sorry, Brandon. No, you didn't lose me. Just the mute button. So just taking a look at some of the trades that you have out there. Tesla is one that you took this morning. Obviously, bad news with those Q1 deliveries here, but stock's holding up relatively well, all things considered. Because I mean, they were even well below expectations. So it's tough to say that that had been priced in, unless of course you're going off from the decline from the July highs when this was at 299. So what is it in Tesla that you saw this morning that piqued your interest?
Yeah, I mean, obviously not the greatest delivery numbers there. Yeah, I think if you read the expectations before, people definitely were not expecting the greatest report. I don't know if people were expecting quite that low. So I had it on the radar, like most people probably did, because the deliveries, and I got that gap down. And first couple of candles, they all just had these real long upper wicks, almost like a little bit of a mini bear flag pattern. So, that stock's been under pressure compared to some of the others, and thought that the 160 level might be in sight based upon where it was. So, when I saw those kind of forming and the rest of the market under pressure, just felt like it was going to really get pushed down. And then on the intraday, it started to form really an inverted cup and handle pattern. So, again, anytime I see technical patterns, I get even more excited about a potential trade. And, the markets have
What do you
kind
want
of,
me to show on that, Brandon? The 5 minute?
oh, I'm sorry. Yes, the 5 minute would be great.
Okay.
Yeah, so really, if you look in here, form basically from the open, you get the cup that goes until about 11, and then what looked like the handle up until the lunch hour. And I mean, we have, like we've talked about, we have seen some bounces here, which I'm sure has helped a little bit. And like you said, it is kind of holding up. So unfortunately, the handle hasn't broken, but um, just watching this one today, the bounces and stuff just really, again, haven't felt all that strong. I'm sure that, the Tesla shorts that are out there are chomping at the bit, because anytime they get an opportunity to go after Tesla, I think they do it full steam ahead. So, based upon where it is and, little selling in the market, I think that 160 level is probably going to come back into play here sooner rather than later.
All right. So, is there anything that would have you throwing in the towel on this play, or what's your target for? Is it that 171 area?
Yeah, I don't necessarily want to see it get above 168. And, obviously, if it got above 170, that would probably potentially change the trade altogether. But definitely hoping it stays below the 168 here into the close.
Okay. So we'll keep an eye out on that trade there. AMD, you took this one yesterday. Obviously, it's been very difficult for semis. Yesterday, we're seeing a little bit of safe haven buying, I'd say, but that definitely took a nasty reversal today, as people are starting to throw in perhaps some of their winners in order to cover up some of their losing bets, especially if they were late to the ball game here. So, what is it in AMD you're watching for? You just planning on riding this out at the moment? I would assume a recapture of that 50-day moving average would be ideal for you.
Yeah, it's like you said. I mean, the semis were working strong yesterday, and then unfortunately just totally flip flop today. So it happens, not a complaint, but one of the joys of trading sometimes, unfortunately. So yeah, I mean, like you said, they were looking pretty good yesterday, and just kind of saw an opportunity that it pulled back, and looked like it was going to make a move, and it did actually. I mean, unfortunately, the options were up about 35% at one point, and I was kind of kicking myself a little bit last night. A little shame on me. I thought it was going to go and test the highs of the morning around the 187 level, and just with the choppiness, I should have just known better that the 185 level was right there. I think on 90% of the other trading days, if we weren't in this, 4 or 5 days of pure chop, it probably would have gone to the levels I thought. But unfortunately, with the chop, it reversed at 185. And I didn't take my profits soon enough, unfortunately. And, it's been kind of building a base here, really around the consolidation breakout zone that it had from end of January to the end of February. And yesterday looked a little bit like it was trying to maybe break out of that base. And, frankly, I think it probably would have if, the market just didn't come and push everything down. And, obviously on days like this, tech and semis are generally going to get hit pretty hard. So, thought I might have had the start of a move back up to the 20-day, but just the market forces pushing me down. And yeah, like you said, probably keeping an eye on that 50-day going forward.
Yeah. So look, I know we were talking about this earlier, where you just feel a little bit snake bitten, where you've been laying out a number of plays that are on your radar and just kind of keep firing on the wrong one. And we've certainly all been there. But some of the other names that you were throwing out to people are acting a little bit better here. So let's take a look at some of the plays on the radar. Google being one. Nice breakout yesterday from Google there. A little bit of an inside trading day at the moment, but holding gains in a pretty tough market. I know it's down 0.92% here, but after that initial selling, it has bounced back. So what was it in Google that piqued your interest? And is there anything here that would get you to move?
Yeah, so Google, and we talked about this, I think it was last week. If you're on the weekly chart and you zoom out, let me just pull this up here. Goes back a little ways. So if you're going all the way back to the end of 2021 on the weekly chart, it's got that big, again, kind of cup and handle pattern to it that it's just starting to break out of. And, from here, this is making all-time highs. And, obviously pulling back a little bit today, like you just said, but this has made an all-time high through some of this chop that we've seen over the last week. And like you also said, showing some strength. And, with a technical pattern in place, the technical pattern would technically be up in the 200 range. So, again, there's a couple curveballs that are out there. We've got rising rates. We're obviously, breaking below, like the 20-day on the NASDAQ, things like that. So you got to take that with a grain of salt. But, technical patterns, there's a reason why people trade them. They tend to come to fruition. So, as long as the market doesn't, totally melt down, Google's probably a pretty good long candidate going forward, unless it starts to really reverse that pattern and, probably go back down below like the 140 level. This is probably going to be a pretty good call candidate. And, again, it's got earnings and stuff coming up. So definitely curveballs, but it's worth keeping on the call radar.
All right. Yeah, no, I like the look of that chart for sure. A lot of questions, of course, around Google, which you said earnings will be coming up. Feels like most of the regulation headlines might be out of the way for now anyway. We'll see what the final pieces are, but chart looks great. No doubt about that. And another one that you were talking about is Target. Let me know what time frame you want me to show this one on, Brandon.
Yeah, so just the daily would be great for the next couple staple names.
Dating back to any particular time frame?
No, actually, these are all pretty current things. So, yeah, like I said in my notes this morning, I just saw a few different things in the staple sector that caught my attention. So, Target in particular had a pretty textbook shooting star candle yesterday. Walmart. Sorry, I'm gonna rapid fire here just for a second here, Gavin. So hopefully
Walmart.
the charts can keep up.
Not a problem. It's
Well,
not the charts that need to keep up, Brandon. It's the idiot narrator here. All right, so I'm on Walmart here. Let's break it down a little under the 20.
Walmart was testing that 60 level, and then Procter and Gamble, that did not hold the 20-day, while also testing the 160 level. And then the final one would be Costco. So Costco, if you look at the last couple of days here, Costco kind of had like that I don't know, support shelf, let's call it, and kind of a little bit above the 50-day. So it started on March 25th and it broke it just yesterday pretty solidly on some decent volume, which also put it below the 50-day. So, anytime some of those, support shelves tend to break, that catches my attention. So, we had 4 different things that caught my attention all in one sector. And, again, when these sectors act in conjunction, you get the stronger moves, which, is ideal for any trade, but it's really ideal if you're looking at an options trade because, those just tend to perform better when they get moving a little bit more. So just saw all those things at once, the big names that are out in this sector. So caught my attention. I guess maybe the one thing that made me a little nervous about it was, I guess these would be considered value names. And, through this rotation here that we're seeing into industrials and stuff, seems like value might be, one of the beneficiaries. But these are, I haven't looked. As I mentioned in my notes, I was going to focus on just on Costco and Target because those are my favorite traders. Walmart down 1.5%, Costco down about the same. Yeah, and Target too. And, if you look at like Costco, if you actually flip over to the 5-minute real quick, just really no bounce at all. So, maybe a couple points here at 130, but other than that, this has just not seen any bounce. That is a pretty nice little downtrend day. And, as of right now, it is, no wicks at the top or bottom. I talk about that all the time. And the volume's looking pretty good from a selling perspective. And, at this point too, Costco has been such a great chart. It's broken some things. It's broken the trend line. It's broken a lot of the moving averages. And at this point, that 700 level looks like it's probably in sight if the pressure remains in the market. So that is one that I'm liking the look of right now.
All right. Let me ask you this, Brandon. So, for the last few weeks when you've been on, you've been bullish and just saying that you're not really seeing anything that's gotten you excited on the short side here. That seems to be changing now. Would I be correct in that, or would you say it's more of a short-term thing where you're keeping a long-term projection going on? Because you always talk about how when times are good, you like to just concentrate on calls rather than trying to get too cute and guessing directions in the markets and vice versa. Has there been anything that's changed your mind on that has you looking more at puts?
Yeah, so I actually did enter the week pretty bullish, actually. I thought with some of that quarterly rebalancing behind us, a little consolidation, the market's holding up well. I thought that we would have maybe seen a little bit of a better week. Obviously with the rates spiking and some good economic data, I changed my tune on that a little bit. But longer term, we've talked about this a couple times in the past, looking at like the NQs, every time it's dipped below that 20-day, it's really been a head fake for several months now. So that is very much sitting in my mind. As far, I would say more of a short-term thing, unless we get that further breakdown that we just talked about. For me, I talked about this several times in the past too. One of the real basic things that I look at is, my watch list. And if 100% of things on my watch list are red on a day, I kind of tell myself, well, maybe I shouldn't just be jumping in with a bunch of calls, even though the longer trend is up. So that's kind of what we have today. Things are just red out there. And there's been a couple of decent call opportunities throughout the day. But, again, I just kind of tell myself, keep myself in check. If everything's red out there, maybe today's not the worst day to take a quick shot at a put.
All right. Is there anything in particular that would have you change your mind? Are you factoring rates at all or anything along those lines? Or are you pretty much just keeping tunnel vision and looking at the charts and trying to block the other noise out?
No, this is definitely a time when I am checking the 10-year on a regular basis. That's actually one of the regular charts that I have up right now, just because we have seen that spike. So, I try to drown that out at times because it doesn't always, necessarily work, because sometimes rates spike and the markets soar and vice versa. So, this is definitely one of those times I'm keeping an eye on it, because it definitely seems to be adding a little pressure this week. That's for sure.
How have you been seeing volume the last few weeks? I know I was just reading a piece about on balance volume and how that's kind of diverged from some of the recent price action. Do you follow that closely at all, being a technician?
I don't look at the on balance volume. I used to. As I tried to streamline the technical indicators that I looked at, that was one that didn't make the list. It's a good tool. I didn't want to be looking at 30 different technical indicators myself.
Now, let me ask you. I know you've been kind of watching Reddit a little bit out of the gate there. How are the options trading in Reddit? Has there been anything notable on that front? Because I've certainly been hearing a lot of retail's interested in it, and just kind of curious what you're seeing on your end.
No, I mean, nothing that really jumps out to me. I mean, I mentioned the numbers at the beginning of the call. I mean, that's nothing earth shattering. I mean, premiums are high. It now has both monthly and weekly expirations. Yeah, I mean, really nothing jumping out at me except the fact that the implied volatility is pretty high on it, which I don't think anybody would be too shocked by. But I mean, even today, I mean, we've got a very, very limited subset of numbers, just because it just started trading options. But looking at the call sizzle index, it's under one today. So it's not even trading that many calls today, and it's up 8%. So yeah, really, really nothing jumping out to me at all.
All right. All right. Let's any other names that you wanted to highlight here, Brandon, before we move on?
Let me just take a quick look here at my list.
Covered all of them from the list.
Yeah, I think we got it about covered here.
All right, then let's get into this week's lesson. And we're going to be talking about bull put spreads. So, you want to break in on that and give us a quick overview of what a bull put spread is?
Yeah, and actually, I just remembered this isn't a stock specific, but an article I saw last night, just staying on the options front, that I found interesting. I have to admit that my mom was here on the last day of a trip, so I spent the afternoon with her as opposed to poring over options change to dig deeper into this.
Yeah,
But
family time's important. Family time's important.
yeah, and when it's 70 degrees and sunny and your mom's here for like the last couple of hours, it's just a little more exciting than an option chain. That's for sure.
Of course, of course. But what
Um,
was it that you were seeing from that?
yeah, so there were some reports out that apparently the options market is showing a lot of activity where traders are not so much worried about hedges that are looking at a tiny pullback. There's a lot of bets that are going on right now in the markets for a very big move. Things like more VIX calls being bought and people going further out of the money on things. So it's interesting that apparently in the options market right now, people are just not concerned about the 0.5% pullback. They're really looking for, as the article said, more of a black swan type event. So I'm gonna try to dig into that.
There's big money going into this, you're seeing?
That's what the article was saying. Yes, it was saying that some pretty big flows, I think, both on the retail and the institutional front, were really making a play for a black swan type event.
Is it a leap play in terms of something after the election? I mean, you it's not out of the question that people think that something screwy could go on along there, right? I mean, not jumping on either side doesn't seem like either side's going to really accept a loss, I would say, at this juncture. So I would assume a lot of the moves are going around leaps and VIX. Would I be right in that, or is it leading up to it?
I think it was a combo. And again, my apologies for not being able to take a deep dive, but there was discussion of a leap, which, like you said, would encapsulate all the different curveballs, including the election that we might see in 2024. And then it seemed as though it was more in the short term too. So people making some shorter term, more out of the money, put bets, VIX calls, etc., of something happening, I guess, sooner rather than later, which I don't know. I don't want to make this call at all, but maybe today could be the start of that. I don't know. I don't want to make that call. I want to take it one day at a time. But yeah, it was kind of a combination of both things.
Yeah. Okay. Well, obviously, we want to keep an eye out on that. That's for sure. Moving forward, it'll be something we'll follow up with you on a weekly basis here as you're giving us updates on the VIX, and I'll be watching from my own side over here too, just see if I've seen any volume. But definitely over the last month or two, you've certainly seen a lot more volume in the VIX going in. It really hasn't reflected at all in the VIX move, which is interesting. We haven't seen any sort of spike up to the 15, well, maybe to 15, but definitely not up to 20 or anything along those lines. So, something for us to keep an eye out on. Like you said, a downside protection here. It's so cheap. Makes sense to buy it, doesn't it?
Yeah, it's kind of like we had talked about it before. There is some cheap protection out there. Again, as I guess you got to kind of be careful of the pockets that you pick and choose, because as people, do start to move into puts or more VIX calls, things of that nature, just options by, their very nature, those prices are going to get driven up. So, not putting a blanket, things are cheap, go get them, a statement out there, just because of that very normal factor that happens in options trading.
All right. Anything else then, Brandon, that we need to discuss here?
No, I think that covers it.
All right, then let's move on to this week's topic at hand, and that would be the bull put spread. So you've been talking about some of these vertical spreads last few weeks, just kind of going through. But why don't you tell us what the bull put spread represents?
Yeah, so this is the final vertical spread trade, and like you said, the bull put spread. And I don't know if we ever actually, or I ever actually threw out the term vertical spread in the past as I was talking about these, but just to quickly throw that out there, this is just a reference to how the strike prices are positioned. So you've got one lower and the other higher in the same expiration cycle. And then there are other things out there such as calendar or diagonal spreads that I'm sure we will tackle here some point in the future. So the bull put spread in particular just consists of one short put with a higher strike price and one long put with a lower strike price. And both puts have the same underlying stock and expiration date. So this is a net credit strategy. So again, money is deposited into your account upon opening the position, and they are established to profit from a neutral to a bullish price action in the underlying stock. So they would benefit from both a rise in the stock price and time erosion as it erodes away the option price. So again, we've talked about this a few different times, but just a reminder on the net credit strategies, we would benefit when options expire worthless. So the short put on this generates the income, whereas the long put's main purpose is to offset the assignment risk and protect the trader in case of a sharp move downward. And, so again, just like many other spread trades out there, we're just trying to protect ourselves by spreading out our risk via two trades instead of buying, the outright puts or calls. So Again,
Now, when you're comparing the short put versus the long put, what I'm assuming the short put would be a weekly, long put would be a monthly or anything above.
I'm sorry,
Would
could
that
you say
be a
that
good?
for me
You,
one
you're
more time?
you're talking about a short put against a long put.
Yeah,
Now,
but they would have the
is
same expiration date.
same expiration date? Okay. Okay.
Yep.
Okay. Okay. I understand what you're saying now. Okay. My bad.
Yep. So any of the verticals are going to stay on the same expiration date, and then what you would be talking about would be, the potential like calendar or diagonal spreads that we'll, I'm sure, tackle at some point.
Yeah, no, I was thinking more in terms of the time period you're talking about with long and short, not the directional. So my bad, my bad.
Yeah, and as far as timing, weeklies, monthlies, again, kind of, the world's your oyster really when you pick. So, again, if you're it depends on whether you're looking for, just the longer term protection, or, looking to make a shorter term play on a volatile day like this. Again, we've talked about this with the other spread trades. If you were very, very bearish today and you saw this big move, I might maybe make the argument that a straight put would have done, it definitely would have done better than a spread trade. And, I'd probably argue on a day like this, you'd maybe just stick to doing the single trade as opposed to the spread trade.
Right. So this would be a trade more in times of uncertainty over an extended period, you would say.
Yeah, no, it can be. Again, if anytime that you're on the net credit side, if you've got some uncertainty or some choppiness, this probably would have been a pretty good little strategy to have on board last week. And, again, if you could also, if you're really talking about choppiness and, stocks just trading flat, maybe just writing a straight option makes more sense than a spread trade in that case. But yeah, I mean, you probably would have done pretty well on this particular strategy last week if you had picked one of the stocks that was, choppy and had a slight rise in the price over the course of the week.
All right. So I'm guessing as we go along, you'll be providing a little bit more insight into this, but some of the names that you mentioned up above would fall nicely into this bull put spread.
Yeah, I mean, absolutely. CRM, that's probably a pretty good example here, just kind of in the green. You would have had to be careful because the intraday move was actually pretty strong. I think reports are on that one, just while I'm on it, that I think it's going to benefit from some changes at Microsoft. But, the overall trade on the day, just kind of slightly up to flat, would be the type of strategy that you would put into place here. Exactly.
All right. So again, you said net credit strategy. So it'll benefit when options expire worthless still. But is that your main goal from this trade? Would you say what the ideal turnout for this trade would be? What exactly?
Well, let me. Yeah, I mean, obviously, your potential profit is limited to the net premium that's received. So, that's going to be the ultimate goal of most traders in this case. Again, anytime you got a net credit strategy, you get the money into your account and you hope that it moves in favor for you to a point where you get to keep all of that premium and you don't have to give any of it back. And then, on the flip side of that, your potential loss in this case is just your difference between the strike prices minus the net credit that's received. But to further elaborate on what you just said, I want to read something as far as the ultimate goal goes. I usually don't. I try to not just take things from websites and read them off to everybody. But I saw this on Investopedia when I was putting this together, and I kind of liked the comment, and it kind of felt like it related to the market that we've been seeing lately. So I think it's a good answer to your question on the ultimate goal. So bear with me here as I read this off
Sure.
directly from their website. So it said, consider using a bull put spread to earn premium income in sideways to marginally higher markets, or to buy stocks at reduced prices when markets are choppy. So buying stocks at reduced prices is possible because the written put may be exercised to buy the stock at the strike price. The credit received reduces the cost of buying the shares compared to if the shares were bought at the strike price directly. This strategy is especially appropriate to accumulate high quality stocks at cheap prices when there's a sudden bout of volatility, but the underlying trend is still upward. A bull put spread is akin to buying the dips with the added bonus of receiving premium income in the bargain. And I must say, I have to admit, I didn't know what they meant by receiving premium income in the bargain. And I actually had to go back to the website to make sure I copied it correctly. But when I was putting this together, I was reading that and I was like, boy, that really just feels like the market that we've been in over the last, week or so with the choppiness. The longer term trend is still in place, maybe breaking it a little bit today. But just when I saw that and I was looking at the market, I just thought I'd, for the first time, cut and paste something off a website and read it off.
Yeah, no, I mean, makes sense, especially in a market like this where everyone's playing for a pullback, right? But there's that FOMO that's out there that people feel pretty confident is going to continue to kick in on any sort of pullback. So a strategy like this is something for those who don't like to sit on their hands, but or don't want to chase the market and are just kind of waiting around as we chop sideways. This would be a perfect strategy for them, I would think.
Yeah, that was kind of what I was thinking. And you kind of
Especially
got,
if you're going through and putting together your wish list, the shopping list that you want for names when they pull back, where you could play this in, probably keeps your eyeball on them a little bit more closely. So, is that how you would view this?
yeah, absolutely. And, again, the whole kind of point of the spread, I mean, there's a lot of points to spread trades, but, one of the main points is you spread out your risk. Again, you're not just buying one put or one call or writing one or the other. You're spreading out that risk. You're reducing your capital exposure, et cetera. So, this is that type of environment where, you're looking to protect yourself on the risk side, and you've got some choppy markets. And like you said, I mean, I sit here and I look at my list, as we've talked about. You've got all this red out there. Markets are down pretty solidly, but there's that FOMO. There's that fact that the NQs, every time they dip below the 20 over the last couple of months, it just rips higher. So, again, with the rates spiking, I think the jobs report is this Friday. The earnings that you mentioned starting next week. I mean, obviously some curveballs here, and we'll start to hit some seasonality of the sell in May. But like you said, I mean, there's that FOMO out there. So this is kind of one of those times where maybe we try to think outside the box a little bit and, do a strategy that's, maybe just not a straight call or put.
I'm trying to think, since you mentioned seasonality, are you a big seasonality follower?
I mainly keep an eye on it when all of a sudden an article is sent to me that's like, we're entering the doomiest time of the year. And I'm like, oh,
Sure.
okay, maybe I should pay attention to that. I don't go out and find individual stocks or anything like that based upon seasonality, but if I know that I'm entering into what is historically the worst month of the year for the stock market or vice versa, I try to at least keep that a little bit in the back of my mind.
What about tax season here? Obviously, April 15th. Because I was kind of surprised at this. I was under the assumption that the first part of April would be generally pretty weak. The idea that people would be selling stocks in order to pay maybe a tax burden, but I was surprised to see how strong it is historically. much more so than the second half of the year, which I found interesting. Of course, you always get earnings kicking off in the middle part of the year, and the first week or two of earnings definitely does have a little bit of a choppier feel to it, I think. So, but I was kind of surprised to hear that myself on April at least. Anyway, did you have any thoughts on going around with tax day coming upon us?
I have to admit, I haven't seen any sort of article sent my way on that, so I didn't even think about the tax season seasonality. So, yeah, like I said, I mean, I personally try to not get caught up on some of those things too much. I think they're great to think about, but I don't know. I guess for me, I just don't want to sit for the next couple of weeks thinking, hey, the market's going to go down or up because of this. So, I'll probably take what you said today and maybe keep it way in the back of my mind. And from there, just, watch my usual 5-minute candles, since those dictate all.
No, that's good. Perfect thing there. Just stick to your game plan and you don't have to follow everything in the markets, right?
Yeah, and they are great things to know about, like you just said, tax. I have to admit, I didn't even think about it, and that reminds me, I need to, call my accountant. So,
Yeah.
you know,
Hey, might want to get on that soon.
yeah, right. I guess it's just one of those things where I have in the past entered into, what is it, October? Is October the worst month for us usually? If I'm not
September.
mistaken? September, sorry.
Yeah.
I think I entered into September and it was like, gotta buy puts. That's all I need to focus on. And, the market was probably up 3% that month. And I'm going, well, that didn't work. So, I like to know that they're out there and then kind of move on with my day, I guess.
Yeah. Yeah. All right. Anything else, Brandon, on the bull put spread that we need to know?
No, I think we just about covered everything in the notes there. So I think we're good to go.
All right, perfect. Well, with that, then I will let you get back to the trading desk here and provide us some more good ideas. If you can't stick around just for a second after I turn off audio, I just had a quick question for you before I post the uh, the replay comment. But we are going to be shutting down audio here. Just keeping an eye out on the markets. It's right at that 5250 area. As Brandon said, both of us are seeing this as a little bit of a weak bounce. So I'm going to be looking possibly maybe at a short in the final hour here myself. But I'm just going to close this down here and be back on in just about 5-10 minutes. All right. So everybody, Brandon, thanks for joining us as per usual. Everybody else, just hold on and I'll give you the alert when we're back up.